In this video, I'm talking about salary sacrifice. What is it and is it worth it? If we haven't met before, my name's Angela. I'm your money messenger. I'm here to teach you what you need to know about money. I'm here to share with you some of my knowledge that I've gotten over my 2-decade financial planning career. I teach people how to save money, repay debt, grow their wealth. I'm also an investor myself, so everything I teach you in these videos, I do myself. I know it works. So in this video, I promise to teach you about salary sacrifice. What is it and is it worth it? So let's get started. So salary sacrifice can be twofold. When we talk about salary sacrifice, people often include salary packaging as a type of salary sacrifice. They're slightly different, but the end result is basically the same. Just one focuses on your retirement savings and the other focuses on living expenses and more immediate expenses now rather than retirement savings. So let's have a look at both. Salary sacrifice to superannuation is done in contributions that you make over and above what your employer contributes. So as an example, say you earn $70,000 and you ask your employer to salary sacrifice $50 per week into your super fund. That means your employer will take $50 per week out of your salary, put it into your super fund automatically every payday, and then pay you the leftover. They'll also adjust your income tax so that you pay less income tax because the money you're putting into superannuation is a tax deduction. So that comes off your taxable salary. So let's have a look at this as a better example to give you an idea of the dollar value to you. Say you earn $70,000. You would usually pay in income tax about $13,500 per year in Australia in income tax. You ask your employer that you want to salary sacrifice $50 per week, which is $2,600 per year. That $2,600 per year comes off your $70,000 taxable income, so you pay less income tax, about $12,500, just slightly higher. So already you've won twofold. You're putting money into superannuation, which is your long-term retirement savings, which is very tax effective and it will grow your wealth for later in life. And number two, you've also reduced the amount of income tax you pay by about $1,000 a year. So you're better off already by $1,000 and your savings. Now, when the money goes into your super fund, it is taxed, but only at 15%. So that's a lot less than the tax you pay on your salary of $70,000, your marginal tax rate, which for someone earning $70,000, they're on the 32.5% tax bracket in Australia, plus a 2% Medicare levy. So that means you're usually paying 34.5% tax, not on every dollar you earn, but that we say your marginal tax rate is 32.5%. That's a lot higher than the tax rate in superannuation, which is only 15%. So you can see the difference there is what you're saving. That's your net tax savings to you, and it's quite lucrative, it's quite beneficial. So after you take off the contributions tax, we call it, when it goes into superannuation, you've saved on your income tax, take off a little bit of contributions tax that you do have to pay in your super fund. The net benefit to someone that's earning $70,000, salary sacrificing $50 per week, would be around a $500 per year savings to you. So that means you're $500 better off just by salary sacrificing a small amount into your super fund each year from a tax perspective, plus you're also putting away money for your future retirement savings. Now, the benefit of this is that it reduces the net cost to you of making that salary sacrifice. You're paying less income tax, so your benefit is future, but also immediate. So if you say to your boss you want to salary sacrifice $50 per week, after all your tax deductions and whatnot, your reduction to tax, the net result is that you're only salary sacrificing really out of the pocket about $33 per week. So it's quite tax effective and beneficial for you to salary sacrifice. Pay less tax, more money for you to put towards other things, or a higher amount of salary sacrifice. Now, conversely, with salary packaging, the end result is quite similar from a tax perspective, but you're not putting money into your superannuation fund. Salary packaging is whereby your employer, not all employers, usually it has to be a government department or maybe a not-for-profit organisation, they will have allowances generally to allow you to salary package, which means certain expenses can be paid using your salary and then it comes off your salary as a tax deduction. So essentially you're paying with pre-tax money and paying less tax. I'll give you an example. I have a friend who's an ambulance officer, and because she works for a not-for-profit, she has an allowance for entertainment. Now that means it's capped at $5,000 for her industry, but she can dine out, movies, restaurants, theatre tickets, whatnot. It's just entertainment value. And that's a bonus that her work gives her for the work she does, but without literally paying her more income, which then would mean she'd pay more tax. So instead, they allow her to salary package entertainment expenses up to $5,000. So she has a little card. Whenever she goes out dining, she puts her expenses on this card, and then whatever she's spent up in the year, in the financial year, up to $5,000 worth, that comes off her salary. So if she was earning, in this example, $70,000, she would then only pay tax on $65,000. So you can see that salary packaging can be a fabulous way as well to get some tax benefits now, because you're already making these expenses. Some places allow you to salary package mortgage repayments, insurances, cost of a computer, other living expenses as well. Depends on the organisation you work for. As much as you can salary package, it's awesome because it comes off your taxable income, so you pay less tax. So to summarise, whenever you're offered a salary sacrifice arrangement or a salary packaging arrangement, or both if you're lucky, go for it because they're awesome. They have some trade-offs, particularly with salary sacrifice contributions, that you can't touch that money until you retire. But if you're willing to have that trade-off, the payoff is you're paying less tax. And that's always a great thing in my eyes. Less tax you pay, more money in your pocket for you. So is salary sacrifice, salary packaging worth it? Yes. In my eyes, yes. The only time, as an example, that salary sacrifice might not be worthwhile is if you're on a low income. If you're earning, say, $20,000 per year, you're very close to the tax-free threshold in Australia, which is $18,200, which you don't pay any income tax on at all. So if you're not already paying any income tax or much income tax, then when you put money into superannuation via salary sacrifice, you're going to pay 15% contributions tax. So now you're going to end up paying more tax than you probably would have otherwise. So there's different ways to be able to contribute to superannuation in that case. If you're a low income earner and you want to put money into super, there's other types of contributions called non-concessional. That means they're not tax deductible, no contributions tax payable. So the only time it's not maybe very tax effective for someone to salary sacrifice is if you're on a lower income. If you're earning $20,000, $25,000, probably $30,000 even. After that, it's going to be better off for you to salary sacrifice if you're a higher income earner or paying more tax. If you're a super high income earner, it's going to be very beneficial for you to do salary sacrifice because you're going to pay a lot less tax. That doesn't mean this program was made for people that earn a lot of money to be better off. It just means that higher income earners are already paying higher tax than some other people. So of course they're going to save more if they're already on a higher tax bracket. The higher the marginal tax bracket you are on, the better the net tax savings to someone to salary sacrifice or even salary package, the more savings they're going to do. It's just pro rata. So in my eyes, salary sacrifice, yes, it's a winner. In my eyes, salary packaging, yes, it's a winner. If you're lucky enough to have salary packaging, please inquire through your employer what that means for you and how much you can pay and what expenses. If your employer allows salary sacrifice, which most employers will, please explore it. Even chucking $50 a week into your super fund can be very tax effective for you to save money and also means you're putting away more money for your future retirement savings. If you like what you saw today, please subscribe, give this video a thumbs up, share it around to your friends and family. I want to get financial fluency up in this country and around the world. So let's get talking about money. If you've got any questions about money, please feel free to pop a comment in the box below and I'll do my best to answer them and maybe make you a video about your particular topic. So don't forget to subscribe. Check out, please, my website, moneymessenger.com.au. You can grab a copy of my new book there called The Money Messenger. And in that, I go through all sorts of detail about all things related to money, including superannuation and salary sacrifice. See you next time for the next video. Bye.